Greetings, members one and all of the Salivation Nation. Inflation accelerates to 4.2% from a year ago. So why did gold and silver fall? Let's explore. For another perplexing question, we've seen these as of late. These are indeed strange times in which we live, for sure. But one thing we know that is constant in the long run is that these metals that you see before you here, they will preserve your wealth. But once in a while we will find anomalies such as we see today. We've been referencing a few different news pieces about what happened with the markets today. The gold prices and silver, they fell today after a hotter than expected inflation report. And that inflation report is what pushed up the treasury yields and also the US dollar. Go figure. It's kind of crazy to think about, but that is what happened here. And the government said inflation has accelerated at its fastest pace in more than 12 years for April, and the consumer price index rising 4.2% from a year ago compared to the Dow Jones estimate for 3.6% increase. And so when you exclude volatile food and energy prices, the core CPI increased 3% from the same period in 2020 and a 0.9% on a monthly basis. The higher numbers might add pressure on the Fed to bring forward rate rises. In other words, they could raise the rates sooner than their original estimate, which is 2023. And I think that is putting pressure on the yields, which in terms can possibly say, well, rising rates means probably a stronger dollar and a lower gold and silver prices. And that's kind of the foundation as to why these numbers are acting the way they are. But that's just what the sentiment is today. We'll see how it plays out. I think we're kind of looking at an area where I don't think it's going to kind of get away from them, at least not necessarily, I don't think, to a hyperinflation level, but I'm not ruling that out for sure. In this day and age, you can't rule anything out in terms of what's going to happen here. But nonetheless, this is something that is worrying folks, and has contributed to a sell-off in rate-sensitive tech shares is also this week. Dow Jones is down 600 points as of the recording of this video. We'll see how it plays out. Concerns of a potential acceleration in inflation dragged down the U.S. currency to a more than 2-month low in previous sessions and drove Asian shares to 1-month lows earlier on Wednesday. Some investors view gold as a hedge against higher inflation that could follow stimulus measures. But higher treasury yields have weighed on non-yielding bullion's appeal this year. In fact, with gold being approximately 50% correlated with treasuries, so it gets hit as interest rates rises. This is from Jay Hatfield, who's the president of Infrastructure Capital Management. On top of that, the dollar is rallying. The stock market dipping on the inflation data show that investors fear that the Fed may need to tighten soon. And so policymakers of the central bank have been unified in supporting the case for low interest rates. The outlook is bright, but risk remains, and we are far from our goals, Governor Lael Brainard told a virtual event Tuesday. Cleveland Fed President Loretta Mester and James Bullard of St. Louis voiced similarly dovish views. And, it's what they say. What are they involved in? The trickery of quantitative easing. And that is something that will eventually come back to bite us. But it may bite us with much less harm because we're the world's reserve currency. If we lose that, we're in trouble for sure. If we lose that, even though we have the strongest economy in the world, we are at the mercy of essentially ourselves when you think about it. And that's kind of the thing that's kind of padded or protected the Fed and policymakers and also Congress, because Congress holds the purse strings and they control spending. They don't control printing, but they certainly do control the spending. And everybody in Washington seems to be, save for maybe a handful, are against this deficit spending and increased debt in our nation. But nonetheless, it's something that I believe these price drops that we're seeing will be temporary. And so we'll see here. But nonetheless, it's fascinating to see where things are going here day by day, really, with the metals and with also the economy and what is going on with all the geopolitical concerns that are rearing their ugly heads at this point. So we'll see. It's the precious metal prices as of right now did take a considerable drop, especially with silver. Outside of palladium, it took the biggest hit today. Silver is just above $27 in the ask price. It is $27.06. Gold has dropped over a percentage point to $22.90 drop. It's a 1.25% drop to $1,816 for gold right now in the ask price. Silver's drop, being dropped 67 cents, was almost a 2.5% decrease. It's a pretty big drop in percentage-wise for silver. Platinum and palladium took the biggest hit, but obviously it's a more volatile metal. It's down $83, well under the $3,000 level now. This has raised the gold to silver ratio back to where we saw before, above 67. It's 67.32 right now. So there is that. Now, with this being said, I believe this is temporary and we will see the metals move in another direction. But this is an example of how complex and how many different factors weigh in on price. And this is why I'm reluctant to just believe everything about macro manipulation or price suppression out there, because there is other factors that come into play in these markets. It's incredibly complex, the amount of activity that goes on. And though we did hear things, especially in recent days about the LBMA for one, and who knows what the COMEX numbers are, we shouldn't necessarily always just go right to manipulation as being the culprit here. Obviously, there's some negligent things that went on at best. There may be even some criminal things that went on there. I believe stuff like this needs to be investigated for sure. And you call what it is whenever it is prosecuted, such as what we saw with J.P. Morgan and the manipulation that occurred there in the precious metals trading desk. There's no doubt it was manipulation on a micro scale from within the organization of J.P. Morgan, from within the trading desk, the precious metals trading desk. And what was the motive? Well, it was for profit. And that profit can occur when the price is manipulated up or down. And with these high-frequency trades and with these spoofings, buys that had occurred, that had caused some issues with manipulation with precious metals. But nonetheless, what we know for sure is that these metals, they will protect us from economic instability, and they will continue to do that. And it is interesting to see what the prices do from day to day. But I kind of look at this as kind of a buying opportunity. For gold and silver, a buying opportunity when the prices are low. Of course, when you don't have the money to buy them right now, it makes it a little bit more difficult and tough to be able to do. But if you have the wherewithal, I'm less inclined to think that they're going to fall much more than they are now, but they could. So always keep that in perspective whenever you are buying precious metals, that whenever you click that button to buy, or you hand over that cash at your local coin shop, you are buying a snapshot in time based off of spot price and the premiums that are contained therein. So keep that in perspective whenever you buy anything, no matter what I or anybody else says. But I believe most of us here are bullish on gold and silver in the long term, and we'll see how that plays out as we head into the remainder of this month and see what June holds for us from many different levels, including the Basel III Accords, which said that is, I believe, when it's going to take an effect, where any kind of holdings between central banks have got to be traded at a 1-to-1 ratio with the paper holdings that they have there. Some people think that's going to have an effect on gold price too. I kind of doubt it will, at least not immediately. But I do think that it's something to take into account and consider, because most people understand that central banks hold gold and that most of it is in the physical form. They just need to prove it with these allocation numbers and the audits. So there you go. Let me know your thoughts in the comment section below about the news of the day. Acceleration of inflation is quite alarming. 4.2%. Crazy. I think sooner or later it's going to reflect with higher gold and silver prices. A multitude of gratitude to you all for taking the time to watch. And I want to encourage you to hit that notification bell. Please rate, share, comment, and subscribe.